Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra, with me is Shail Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the markets have slipped to the low point, 190 points gone right there as far as the Nifty is concerned. We've slipped below the 24,200 mark as well. It's the Nifty Bank that's definitely under pressure. 1.4% of a loss for the Nifty Bank, which has now slipped below the 50,000 mark as well. There's an over 680 point of a decline on the Nifty Bank. Along with the Nifty Bank, financial services are down sharply, 1.7% lower. You have the private banks that are down by 1.2%. Now even the PSU banks that were holding up in the first half of the trading session has also now slipped over 1% in trade. Metals, oil and gas, broader markets, FMCG, IT, a whole host of sectors that have now slipped into the red. Barring, I think now even Pharma is just around some flat line at this point in time. Consumer durables, however, is still holding up 1.2% higher in trade. So barring this sectoral index, rest of the spaces have all turned weak. Volatility index has also taken a spurt, about 1% higher now at over 16.04 levels at this point in time. Top movers on the Nifty: Titan, Apollo, Tata Consumer Products, Dr. Reddy's, Nestle and Sun Pharma, whereas the top drags clearly are the life insurance names like HDFC and SBI. You also have HDFC Bank that's down over 3%. That's pulled down the entire banking and the financial services space lower in trade. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. It's a painful day, but it's a painful day only if you are looking at HDFC Bank. And that's mainly because the rejig of the MSCI Global Index has resulted in what the market perceives is a lower weightage for the stock. It's now 0.56%, which is going to be applicable from August 31st versus 0.37%, which is now. So the market was expecting higher than 0.57%, and because that has not happened, it's leading to a sell-off. 24,142 for you, 200 points lower on the Nifty, and out of these 200 points, ladies and gentlemen, 56 points have been contributed on the red side by HDFC Bank, and that in turn has pulled down ICICI Bank. Remember, this is the third highest weighted counter. It's contributed 12 points to Nifty's negativity. Tata Motors, ITC and SBI bring in another 28 points all put together. What's helping the Nifty on its way up but still not working? Reliance and Infosys, that's the second and fourth rank counters in terms of index weight, just flat as they are, but provided be in the green. We track 19 indices for you, all 19 are in the red. The advanced decline is favoring bears, 1710 stocks in the green, my apologies, in the red versus just 590 in the green. So that's what the picture is. And if you look at the volume, Sakshi, and herein lies the clue that this loss is just not much. If you look at the most active counters on the NSE 50, which is the index, is obviously HDFC Bank. Now almost 3,400 crores worth of sales have happened. Today's delivery statistics and FI and net sale numbers will be looked at with deep interest. After that is the story. ICICI Bank only 1100 crores are traded. SBI only 835 crores are traded. ONGC only 716 crores are traded. Reliance in the green, 652 crores. Tata Motors in the red, 594 crores. So apart from HDFC Bank, which is obviously the heaviest weighted counter in both the Nifty and the Bank Nifty, this is a mild sell-off, and that's mainly because Thursday is a holiday. Nifty's expiry has been pulled a day earlier, which is tomorrow, and of course we have the Fin Nifty expiring today, and of course the political overhang cloud of Hindenburg, which is still on top of the market. Now how many out of 10, 5 Adani stocks are in the green, starting with Adani Power about a rupee higher, 692.50. Adani Total Gas 2.3% higher. Adani Energy Solutions, which was morning up 6%, is now 1.8% higher. And whatever are the losses are minimal. Adani Ports is down 1%. Adani Enterprises is down 1.5%. There's nothing terrible about the market except for HDFC Bank. And in terms of record highs, Sakshi, it's a very nice list of about 23, 24 stocks in NSE 500. You have the usual suspects. There are 2 or 3 new ones I need to point out. Fortis Hospital, 3.7% higher, 518. You have a new name coming in the form of TVS Motors, 2637, 2.2% higher. And of course, the usual suspects: Aurobindo Pharma, Ajanta, Torrent, Lupin, Cipla. So money definitely is moving towards defensives, and we are now waiting for Mr. Devin Choksi to join us. He's with us. Namaste Devin Bhai, a very warm welcome to you, sir.
Yes.
Are you worried about this sell-off that you see on the market post the Hindenburg report, and your views on Hindenburg as well, sir?
Hi, Shaili. Good afternoon. Well, certainly, this kind of market, I think, is giving an opportunity to investors to buy into. If the MSCI rejig has possibly resulted into the weight adjustments in respective stocks, I think some of the quality stocks, fundamentally sound companies, have actually come down, and that is a buy opportunity, as I always call it as. Because for investors, any cut in the price, which is other than the fundamental reason, definitely I think it's a welcome cut, and that is where probably I think we get a little bit more encouraged to come to the market, I think, in a falling market per se. Coming to Hindenburg, I think lesser we speak about them, better it is. First and foremost, I think they're a non-regulated entity, and even under US SEC, they are questioning the credentials of Indian corporates. They are questioning the credentials of the regulators, questioning the credentials of Indian Supreme Court. I think it is best that I think we don't discuss this kind of entities, because if at all they want to indeed, I think, play a meaningful role, then they should come to Indian court and probably, I think, start questioning whatever they want to, whatever I think legal dispute they want to get into. Having said that, I think most important part, India's corporates are creating wealth. I think many of the companies are basically, I think, participating in building the wealth for the nation. Adani Group in particular, a real solid on the ground wealth creation by way of putting in the hardcore infrastructure in each of the areas, please, whether it is power, whether it is road, whether it is railways, airport. I think you name it, and I think they are putting across the infrastructure for the country as a whole. Obviously, if this wealth is getting created in the country, the benefit of that wealth will come over next 25 to 50 years as well, because they would be generating sustained cash flows. And who in the world would not like to be part of this wealth creation? If they want to indeed get into this wealth creation process, then they definitely want to buy these assets at a cheaper cost. And that's what I think the companies like Hindenburg probably are doing, that they are trying to create the nervousness in the market, creating the short selling positions in the market. And in turn, I think they take up the good quality assets from the market at lower valuations. So I think that's the unfortunate part, that I think our legal system and the regulations can't stop these people from playing around in this marketplace. But nonetheless, I think Indian market's getting mature, and that's what I think more important. Last point which I may want to add here is that we are also having a good amount of liquidity coming into the market. The last month, July month, SIP numbers are about 8% month over month increase compared to June, at around 23,000 crore plus. That's a good sign, because investors are putting money into the market in a systematic manner. And that's where probably I believe that the success story will be written for India.
Right. Very good afternoon to you, Mr. Choksi, and thank you so much for that very well put answer. I think this is the best answer that we've received on the Hindenburg research report from the day that we've been discussing all from Sunday as well. Now I want to understand from you, sir, since you did say that this may be an opportunity for investors to buy into, the markets are showing some kind of a decline. Would you also see some opportunity to buy into the Adani stocks in this kind of a dip?
Indeed, I would think that I think these companies, be it in the, say, for example, I think you take port, I think you're already having 500 million metric tons of cargo handling capacity, and which is systematically being expanded. In the areas of, I think, airports, in the areas of ports, roads, even the data center, energy transmission business, power generation business, green power business in form of solar energy, or for that matter, green hydrogen. Each of the areas of the business, I think, which they are basically building up, these businesses have taken about 2 decades or more for them to build up to this scale. Today, they are actually growing these particular businesses with the cash flow which is getting generated out of these businesses. So, which means that till yesterday, for example, they have been investing big time money by way of borrowing debt, by way of, I think, putting in more equity. Today, I think the component of equity and debt definitely is required, but at the same time, larger amount of money is coming out of the cash flow operations which each of these assets are producing. So certainly, I think if you are planning for next 8, 10 years from now on, and if you are a sovereign fund, if you are an insurance fund, if you are a pension fund, then for you, I think this is an excellent opportunity to buy such kind of assets because they are cash generating assets. They would be helpful to the portfolio of these kind of funds, I think, in a very systematic manner. The individual investors probably may want to buy these assets as well, but they have to have a horizon of, I think, around 5 to 10 years for having these kind of stocks in the portfolio because these assets do generate real wealth for a longer period of time.
Right. Devin bhai, while secondary markets are in pain, all the action is, having a gala time in the primary space. Today, First Cry got listed at 35% premium, Unicommerce 122% premium, Ola 320% circuits back to back. How are you looking at this space? Does Ola interest you at current levels? There was a lot of negativity surrounding the IPO when it was in the subscription phase, and suddenly everything changed post the listing. What do you think contributed to this change of tenor and underlying strength at Ola?
Yes, excellent question, Shail. And I feel that I think this is important to address. On one side, you have no fundamental change taking place between what was discussed pre-IPO, then in IPO, and now. There is no fundamental change as far as I think the Ola's business model is concerned. They are moving systematically into electric vehicle space, and they would have the range of vehicles which would be coming in from scooters to motorcycles. And probably the current buzz in the stock price with the 3 circuits back to back can be explained in two manners. One, on 15th of August, they have promised that they are launching the motorcycle, which are electric motorcycle for the first time. Second point, I think, which is important, majority of the investment portfolios, be it mutual fund or be it otherwise, I think they may want to take an exposure into the newer vertical within the auto space, which comes into our listing. Today, Tata Motors there in passenger vehicle with electric vehicle, Mahindra and Mahindra also is there for electric vehicle, but they are not separate verticals which are listed. Here is a company which is a separate vertical which is getting listed as far as I think electric vehicle foray is concerned, and they are basically creating an ecosystem around that. So, in my viewpoint, I think today's price rally or last 3 days price rally, as one can call it as, is largely out of two things. One, expectation of 15th August, the expected response to the motorcycle, and second most important, which I was making a point here, that additional fund flows are getting into this kind of paper, where I think people would like to own this paper, even though they know that I think the profit in this business is still not as near as I think one even would like to think about. Still, people own this paper largely because of the fact that I think additional idea has to get into the portfolio eventually. This is the understanding that I am carrying. Maybe I think some element of euphoria, some element of FOMO effect, I think may also be there. But beyond that, I feel that I think the rationale suggests these are the ideas where probably people would like to put money and build a portfolio for a long-term return that they want to generate out of it.
Devin sir, the other space that I wanted to discuss with you is the sugar space. Today the entire space is in action. Of course, Balrampur Chini came out with good set of numbers, but it's also pulled up the entire sector with itself. And of course, there is this again the talk of ethanol blending that could be underway. How should an average retail investor really look at the sugar space? It's a very, very volatile, very, very cyclical kind of a business up until so far. But we are all waiting for that clarity from the government as to how soon does it actually get into a structural story. What should be an average retail investor's approach towards sugar?
Excellent question once again, Sakshi, on this subject. I believe that I think cyclicality in the sugar business is systematically getting reduced because of the ethanol play. Majority of the companies have a particular portion of the business or revenue coming out of ethanol already. With the 25% blending allowed, more often you will find now the situation wherein I think the larger component in the revenue book would be coming out of ethanol. And because it's being an industrial product item, even though it is produced out of the agri base, I would think that this is an area where probably you are likely to see a sustainability in the earnings, in the revenue and the earnings both for most of the sugar companies. So I guess I think this is where probably the difference is. Till yesterday, if the sugar companies were cyclical, today they are still not out of complete cyclicality, but at the same time, I think they are now having one more component which is industrial products. You look at companies like EID Perry and all, I think they have actually systematically started moving into the food product business, packaged food product business, wherein I think these companies are actually started producing the higher amount of sustainability in the business. So cyclicality is probably there, but I think systematically it is getting reduced. And that's where I think you are seeing more actions coming in into these particular counters. As I see it, I think this probably is becoming a good story to follow that the cyclicality in the sugar going away, and I think the other businesses are systematically getting into it. So maybe I think some of the good quality stocks probably would be forming portfolio component, I think, within many of the funds as we see it.
Okay. Devin bhai, you are a deep researcher at the telecom end as well. And one major event is this Gram Panchayat connectivity that is seeking telecom gear for 65,000 crore rupees from Indian telecom equipment makers. Do you think there are some medium to long term winners in terms of listed companies in this space?
Yes, I think whenever a capital expenditure program of this nature is undertaken, be it fiber optics, be it tower business, be it the components, I think, which are basically going in for the capturing of the signals, etc. All of these particular area of businesses, I think, are getting major amount of thrust. As we always call it, that I think when the mainframe business, I think, is being expanded, the biggest beneficiaries are the ancillaries to these mainframe businesses. So certainly, I think you will find the participation coming in from likes of fiber optic cable manufacturers, likes of battery manufacturers, likes of the radio equipment players, and so on and so forth, even the tower companies. So this is going to be, I think, a major drive going forward as well. Whether it is going to get unfolded in one particular year time, answer is no. Whether it will be systematically being created for next 3 to 5 years, answer is yes. So that's where probably I think we are likely to see the higher amount of proliferation, stroke, I think higher amount of business execution from some of the ancillary companies to the mainframe telecommunication companies, which is where I think you are probably seeing major amount of actions in likes of HFCL or maybe partly I think getting reflected into Sterlite Technology kind of companies as well. That's where probably I think people may want to buy into some of the ideas.
Okay.
Okay. So HFCL you think is your pick?
Well, I believe that I think it's an opportunity from a
Did I
perspective
hear
of
it
looking
right?
at.
Okay.
Yes, I think that is an opportunity from a long-term perspective.
Yes, sir.
Maybe
Please continue.
in the initial period, I think the near future, everything is priced in. So I think it shouldn't be seen as a recommendation upfront, but at the same time, I think such kind of businesses do take little longer time to give you the returns out of it. Currently, market is excited about every narrative, and that's where I think the prices are going on a very high side. The stock currently is trading at around 50 plus kind of a price earning ratio. So in my viewpoint, I think when the market is of some correction, that is the time when I think the long-term investor would jump in and they buy it. Otherwise, I think the euphoria continues and I think the people just buy the momentum. I think that's what people should be mindful about. You should buy when the market gives you opportunity at corrected price levels.
Okay. Devin sir, the other space that I wanted you to tell us a little bit in detail is the entire renewable energy space, especially wind energy. The way the stocks Inox Wind, Suzlon have been rallying one way. Is there truly merit in the way the markets are rewarding these stocks, or is this now getting into a frothy zone and investors should be wary of the move?
Any kind of capital intensive business, be it power generation from renewable sources or be it power generation from conventional sources, they do take time to generate, I think, the revenue and profits. Both case, I think, the Suzlon as well as for Inox Wind, both these cases, I think they are having a fantastic visibility of order book position. That is a very good sign. That's where the market is probably excited about. I think that's why they are giving them a premium valuation. In my viewpoint, I think the premium valuation is extremely rich at this point of time. EV to EBITDA ratio, if you look at these companies, they probably stand, I think, extremely rich. I think 75 to 90 times, I think, ratio is not cheap at all. And that's where probably I think the chances are that I think you will ride the momentum as long as it is going strong. But the fact remains that I think the fundamentals of the company have been far more discounted at this point of time. Business condition remains robust. I think that is a point. I think that's where I think the market is chasing this momentum. So I think till that point of time, momentum continues. It is fine, but otherwise, I would be cautious about I think buying anything at a very premium valuation. Maybe I think my comfort level is extremely high when I think companies are available at a comfortable level where you take even a little bit of risk, but at the same time, I think with the future expectations.
Okay. There is Samvardhan Motherson's earnings coming in, and we can actually see that the company has reported a profit after tax, which is a jump of 65% odd to 994 odd crore rupees. Revenues also have seen a jump of 28.5 odd percent in this quarter. We've seen EBITDA jump by 44%. Margins have come in at 9.6% versus 8.6% on a year-on-year basis. So there is an all across the parameters improvement coming in. Let's get in Devin sir to address this one as well. Devin sir, you've talked about Uno Minda. You were the first one to highlight many months ago, and the stock has been a multi-bagger since you talked about on our channel. Samvardhan Motherson has also been traders' favorite stock in this recent auto ancillary run up as well. How are you looking at Samvardhan and versus the other auto ancillary stocks?
Well, one needs to remain extremely convinced about the auto ancillary space, largely because of the fact that their OEM customers are actually, I think, having a fantastic run ahead, be it in the area of commercial vehicle, be it in the area of passenger vehicle, be it in the area of farm equipments or off-road vehicles, and at the same time, two-wheelers. All in all, put together, both domestic market as well as export market have also got one added component, which is, I think, the alternate fuels, the flex fuels, as we call them as, along with, I think, the eco-friendly fuels like electric vehicles and even hydrogen hereafter. So all these companies are actually speaking, getting the fantastic amount of roadmap ahead for them. At one point of time, they were only serving the ICE engines. Now they are serving the multiple engines. I think the flex engines, as we call them, with the alternate fuel source, and also serving the renewable segment, which is electric vehicles, hydrogen together. Each of these companies, I think, where we find most comfortable ourselves are, they are actually adding the kit value within their portfolio of products with the same customer, which is fundamentally very positive. So if one customer has been giving you X amount of business, next year I think that customer is giving X plus amount of business. Indeed, Samvardhan, be it case of Minda or Minda Corporation, each of these companies, I think we find, I think these having the advantage of this situation. Coming again to the valuation, and that is a fundamental point. Today, the markets are so robust, so matured that I think they are getting everything priced in a shorter period of time. And that's where I think the real challenge is that unless you entered early and unless you, I think, stayed back with those companies a little ahead of time, probably I think buying at an expensive valuation, you are basically buying a little bit or more time for generating return. I think that's where the word of caution would remain. Having said that, I'm not saying that these companies are not having future. They would have future, but the fact remains that I think buying at a price would always make more sense going forward as well.
Okay. Devin bhai, one sector that has flowered very well in the last 15 days or so is pharma. Record highs across large cap, mid cap, and some small cap stocks as well. What would be your top three picks in the pharma space, given that valuations are still reasonable compared to the broader market, and the first quarter earnings at many companies such as Sun, Cipla, Natco, Lupin have been phenomenal?
Yeah, Shail. So on one side, I think we look at, I think the larger ones like names like Sun, Cipla, even for that matter, Lupin now to be added into the portfolio. I think that I think these companies are being driven by the specialty generic products, I think, which they have been launching in the marketplace with a twin advantage. One, because of the specialty generic products, I think they face relatively less amount of price pressure on the particular product, and that's where probably I think their margins are better than before. The other particular aspect out there is that I think the launch of newer products in this space is continuous. So obviously, I think their margins are also on a steady wicket at the same time the growth. On the other side, I think what we like most about this space is the companies which are basically in the API space, companies which are in CDMO space. I would think that I think this is one area where probably the larger growth is being talked about. You are a formulation supplier, you are a pharma ingredient supplier, or you are a contract manufacturer. Then in such case, I think the customer, that is your OEM customer in that case, I think is basically driving you for higher growth. And that's where we like companies like DVs who have not only expanded the capacity in the backyard, but at the same time, I think creating a fantastic amount of forward integration with their customers. So this is where probably I think you get opportunities to invest and probably I think stay invested for a little longer time.
Okay, Divis is also actually making an exit out of the Nifty, and one of those really indicators in the market is buy the company that is exiting and sell the company that's entering, and the company that's entering is Trent. But these are how should I say, old rumors in the market. Nevertheless, Divis will keep in mind, Devan, something in the small cap space or mid cap space in pharma that you like, apart from IPCA and Divis?
Well, we continue to like I think likes of Zydus and Alembic. Whether you want to call them a small cap, I'm not too sure, or mid cap. Also, I think it is slightly right. But the fact remains that I think these are the companies which are equally strongly positioned from the growth perspective. Uh, Whether I think they would be immediate buy in the portfolio, answer is no, because I think we are continuing to hold some of the large cap companies which I mentioned, and also I think some of the players like DVs, so that at least I think we don't immediately shuffle our portfolios. But yes, I think they are the ones I think little bit more promising in the lot, including Torrent.
Okay. Well, last word from you, Mr. Choksi, before we let you go. How are you looking at these new age internet space companies that are seeing brokerage houses suddenly turn positive on them? So, Goldman Sachs report on Honasa with a 26% upside today. Of course, Zomato has been proving with this kind of profitability returning to the fore. How would you look at the entire basket? It was PB Fintech and probably Zomato earlier, but now others are also, and even Nykaa has been consistently rallying. So how would you look at the entire basket?
So the momentum money definitely is available today, and I think that is what is creating a significantly large amount of buzz. Even if I think a slightest amount of profit on a turnaround happening in these businesses, I think they are fetching fantastic amount of I think price valuation. Zomato kind of company finding a valuation of around 2,75,000 crore of a market value on a profit base of around 1,200, 1,500 kind of crore, which may be growing it even at 30-40% also. But still, I think the valuation is extremely rich as I see today. Well, I think the larger factor in this case is the liquidity. You have more liquidity in the market. So obviously, I think the newer businesses are required to be taken exposure in your portfolio. And that's where I think even if the smaller profit, still a chase for the momentum into some of these new age companies. Good models, but at the same time, value wise, valuation wise, uncomfortable feeling at times, I think, because of the larger premium that they are putting at.
Okay. Well, we'll thank you, Mr. Choksi, for being with us on this very special edition with your wonderful insight on the markets in various sectors. Truly, there is nobody who can explain the markets with the wealth of wisdom that you have and always display it in the simplest of the fashions for all our viewers. We always appreciate your presence with us and hope that you can continue to give us all that insight, days after days as you come back on Business Today. Thank you so much.
Thank you so much. My pleasure.
Thank you. With that, viewers, we'll now welcome our other guest on the show as well. We are now joined by Kush Kodasara. He's a market expert and you've seen him multiple times on our channel. Welcome, Kush. Good afternoon. Thank you so much for taking the time out. We'll start off by asking you, what do you think is the key reason for the sell-off in the markets today? Yesterday, we could have said, yes, there is an Hindenburg research report, but everybody was pushing back that and saying that, probably we should not be paying so much attention to it. The way the Adani stocks also bounced back from the day's low also indicated to the same. Today, do you think it's just about the MSCI changes on HDFC Bank that has pulled down the entire markets, or is there anything else also?
So, good afternoon and thank you for having me on the show. So, I have 3 points to mention. First, technically, since last 7 days, we have been opening below 15-day average on Nifty Bank and all sectoral indices, and we have been sustaining below that level since 7 days. So, technically, markets were weak. Second, we always think that Hindenburg report has not affected Adani Group or our market. Yesterday, I just posted a small price analysis. When first time report was published on 24th January 2023. Since then, only 3 stocks out of 8 Adani stocks have been able to attain levels pre Hindenburg first 1.0. So we have been affected by price rise. And thirdly, yes, I think even Bank Nifty is weak, and especially PSU stocks which have not been able to cross even 4th June high. So there was weakness in the market. And I guess before 2 weeks also, we had discussed about this weakness. And I'm sure I'm waiting for my daily ticket for the party.
Actually, Kush, before you came in, Sakshi and I were just discussing this, that you were the one who had pointed to a short on the Nifty. I think that was 10 odd days ago. And we are obviously looking forward to that trip. Obviously, we'll be the hosts, but it's the Nifty that's paying the cost for your ticket, and I'm sure much more. Obviously, we look forward to you coming to Delhi, and we have that Chola Bhatura round ready for you. So, more than welcome. It's looking a bit weak in the broader markets as well, Sakshi. As of now, the Nifty 500 index is down 200 points almost. It's falling as much as the Nifty 22,721, and this is the broadest measure that we have of investor and trader confidence in the market. So on the back foot, ladies and gentlemen, as far as the broader markets are concerned, out of 500 shares, 367 are in the red on this index, of which look at this particular statistic that we have recently started giving to you. There are 10 stocks in the NSE 500 that are down more than 5%. Aarti Industries post earnings 15% lower. They did not just give an expectation of or the guidance for their future EBITDA margin, and the fact that Devan Bhai mentioned markets are so fully priced and how should I say at a very nervous edge that nobody wants to sort of be left behind and pay the bill for the party. This stock opened about 7-8% lower, and from then on the losses have doubled, 16% lower now. Zydus Life, Deepak Fertilizer, Deepak Nitrite, I think it's the chemical space that is taking it on the chin. Look at how you are seeing moves coming in the small cap index. Again, you have 10 stocks that are down between 5% and 3%. Among them, now these are interesting names. Cochin Shipyard down 5%, NBCC down 4.5%, PNB Housing and HUDCO down 3.7% each. And of course, you have names such as IEX, Tejas Networks, Titagarh, These are all very, very high beta ticket items that saw a very sharp run up. Kush, what are you looking forward to on the charts in terms of two stock ideas, long side or short side?
Sir, I am on the short side because last week I was just on the sidelines watching the trend of the market, and as I mentioned, all of the 5 days, all the indices, mid cap, small cap, bank nifty, except the pharma index, all index had the same pattern, same trend of trading below 5 and 10 day and 15-day average. So I think first time this has happened in last almost 2 years, since the Russia-Ukraine war, that all the indices are showing same kind of pattern almost. So this is showing weakness, and definitely especially PSU stocks, since the budget, or we may say since the elections, traders have been trapped on the higher side, and still they are not able to get out of that. So I think I will be on the short side. I think auto index is something which is high beta. I will take a trade on M&M and Tata Motors on the short side. I think M&M can be shorted at current levels. STBT stop loss would be 2730. We may see 2680 levels tomorrow. And Tata Motors with the stop loss of 1068, we may do again a STBT target 1025 tomorrow.
Okay. Well, Kush, I also wanted to take your view on this chemical stock Aarti Industries that slumped over 15% in trade today, and this is on the weak commentary from the management that's coming in, and the stock has been beaten black and blue. Right before some days, this was the chemical stocks, fertilizer stocks that were turning favorites of all the analysts. What would you now say on stock like Aarti Industries and the entire sector?
Definitely, for RT Industries, I think today is the first day we are trading below 200-day average. So I believe, that is a sign of weakness, and volumes, even on the future side, if we, it's almost 6 to 7x the daily average volume of last 7 days. So I think there is a lots of supply on RT Industries. So definitely I would avoid, chemical sector for some time. I think if RT Industries stays below 635 mark, we may see some more downside up to 475 to 500. So as an investor, maybe every day could be an opportunity to buy. But as of now, for short-term traders, we must exit chemical industry.
Okay, let's also look at some of the big buzzers on the positive side also. Electra Green Tech has been buzzing strongly since morning, is right now holding up about 7.5%. This is post earnings, and after some bit of consolidation, the stock has shot up pretty smartly. How would you look at this auto ancillary maker?
Definitely, today is the first day, of stock trading back about 200-day average. Last Monday, we saw the stock breaking 200-day average support for the first time in almost 2 years. So I think that was a sign of weakness. Today we are back about 200-day average, but yet we are not closing about the same level. So I think still I'm not getting carried away with this run up today. Maybe tomorrow, if we see momentum above 1680, then only I will go and buy the stock. Otherwise, I will still avoid and stay on the sideline.
Okay, okay, ladies and gentlemen, it's almost 3:10 p.m. We have about 21 minutes of trade left, and there is not necessary that you buy every day and every hour. Let the markets sort of settle down. Whenever you have a doubt about this kind of a move, it's always better to buy a consolidated flexi cap fund or a multi cap fund rather than look into individual stocks. There are pain points everywhere. Look at Motherson Sumi, days low despite a phenomenal set of numbers. It's the weak guidance that the company has given as of markets are concerned. It says that there is a sharp increase in container costs and transit time due to the Red Sea issue, and that is leading to an inventory buildup not only at the end of Motherson Sumi but also at the end of actual users of its equipment. In developed markets, especially Europe, I am quoting from the commentary that Motherson has given, there is a delay in EV launches that is impacting production volumes not only in the European market but also for the OEM supplier which is in India, and of course, as we all know, there is a visible slowdown in the growth of electric vehicles. Life of ICE platforms is getting extended. So that's the reason why you see this negative reaction post a phenomenal set of numbers that Samvardhan Motherson has come up with. Like I mentioned, about 19-20 minutes left, and it's a sea of red everywhere, selling all around. IRFC is down 1% at actually it's down 3%. There's hardly a green tick that I'm able to make out, which we can talk about. We normally don't discuss this, but Westlife is up 1% at 794, but these are not stocks that we normally talk about. Defense is sort of getting into very heavy profit booking. Look at BEML. This is a company that came up with numbers that were not appreciated by the market, and at the moment if you see BEML, it is down 5% at 3853. A couple of weeks ago this was almost at 5,000 rupees. So you can see the kind of price erosion that has happened. Almost 25% has been taken out. Cochin Shipyard 5% lower, Zentech 4% lower, Mazgaon 2.4% lower, Garden Reach 2.4% lower. It's a sea of red. We track 18 defense companies for you. All 18 of them are in the red. How about the PSU space? While stocks such as Oil India and Hind Copper continue to be in the green, but they have come off substantially from intraday highs. Hind Copper had an intraday high of 319 rupees 50 paisa. It is now at 308. RVNL is at 572.90. It's retraced from 601 rupees. Oil India is at 688. It's down from 692. And HUDCO actually down 4%. The intraday high was 309.70. Now 287. Sakshi.
Okay, got it. One more space that we can take Kush's view is in fact on these EMS players. Dixon Technologies has been hovering higher in the FNO space since morning, and now Keynes Technology in the cash segment is also up by about 9.3% higher in trade. Let's get you, Kush, to talk about these two stocks. The entire EMS space was I think 4-5 weeks ago all up and about, and these stocks were rallying in a one-way move for days in a row. How would you really look at the stocks? I'm talking about Dixon and Keynes, Kaynes PCR, not CAMS. Dixon and Keynes. How would you really look at these two stocks, Kush?
Definitely, starting with Dixon Technologies, I believe, stock has been trading above a 10-day average in the last three sessions. So there is a bit of a support at 11,500, but, we should wait for a day or two. If at all we sustain above 11,500 for 2 more days, then we can, hedge our short positions on market with the long on Dixon. So definitely, as of now, stock is looking good. But overall, I think going long at the current levels freshly for an investor seems a little bit overexcited. So if you're a future trader, wait for a day. Tomorrow, if we sustain about 11,500, definitely we can hedge our shorts with Dixon Technology.
Got it. And how about the consumer durable space, the lone sectoral mover in the green side today? Anything interesting that you spotted here? Stocks like Titan rallying 1.8% up in trade. Is there anything else that catches your fancy?
Definitely, we had discussed Titan, the day when the custom duties were, taken off a bit, but still Titan is not able to cross over 200 average, which is around 3,500. So I think, this is just on a sideways momentum. I think this stock, Titan, is, perfect stock for option writers on the, both side, call writers and put writers. So I would avoid going long on Titan. On a Tata Consumer is a stock, maybe from FMCG impact, where we might not see that much downfall regards to Nifty. So I would given a strategy by going long on Tata Consumer. 1160 is the stop loss for the target of 1240. Just to hedge our long positions, short positions.
Okay, ladies and gentlemen, the last 15 minutes start for the market to close. It's not looking good. Very heavy selling pressure is coming on stocks and indices of all sorts. The Nifty is now at 24,120, down 224 points. Bank Nifty has shed almost 800 points at 49,800. Remember, the budget day low was 24,080, 24,070. Whether that will be tested or not, only time will tell tomorrow. But this is now not looking good at all. Look at the volume on HDFC Bank. Remember, this is the biggest pain point in the market today. 4,156 crores. If you look at the FII selling number for yesterday, it was 4,681 crores on a net basis. This is not to say that all those sales came on HDFC Bank, but this is a stock where the most selling pressure normally gets seen. 3.5% lower. I think HDFC Bank would have tested its 100-day moving average. Kush, can you do a technical check on HDFC Bank?
Definitely, I think HDFC Bank was looking good until 2 days back, but now I think again this pullback can be considered as just a bounce back. I think a C wave, which we term as the last leg of correction, have been initiated. 200-day average is at 1540. I think that is the ultimate support and target for the downside. So if you are a short trader, hold on your shorts for 1550 mark. And if you are an investor, be ready with the cash to invest at around 1550.
Okay. Please also bear in mind that since the day the budget was announced, July 23rd, except for August 1st, which was a minor 300-400 point net purchase from FIIs, the last 14 sessions have seen a negative number of 25,000 crore rupees cumulative from FIIs. Actually, much more. 25,000 is only from 1st of August. If you look at the previous 3 or 4 sessions from July 23rd onwards till 31st of July, this one will be a dramatic number to look at. Of course, domestic institutions fueled by our monthly SIPs from the retail investor side have bought about 27,977 crores, but sentiment is what is going to see the hit as far as markets are concerned. This is how it is at 3:18 p.m. ladies and gentlemen. Apart from HDFC Bank, there isn't much selling pressure to talk about, but this is how it is. RVNL down 1.6% is the second most active counter, 2355 crores at 566. Within the Nifty, the next selling pressure is on ICICI Bank. Only 1376 crores worth of shares have been traded. On SBI, just 1300 crores. On ONGC, just 940 crores. So it's only and only HDFC Bank which is creating this mild mayhem, if you may, on both the Nifty and the Bank Nifty. The Bank Nifty is down 1.5% at about 49,823. Sakshi.
Okay, IRCTC has come out with the numbers. Let's quickly look at those. Net profit is up by 32.5% at 307 odd crores. This is on a year-on-year basis, an improvement from 232 crores to 307 crores in Q1, a 32.5% uptick on the net profit. Revenue has improved by 11.8% at 1120 crores versus 1001 odd crore rupees seen in the year-ago period. We've also seen that the margins have remained steady, slightly lower than last year same quarter at 33.5% versus 34.2%. EBITDA has also seen an improvement improvement for the company. IRCTC shares are down by about 0.4% off the low point of the day, but have been severely choppy since morning. Let's get Kush to address the railway space and IRCTC also within that space. Kush.
Yes, definitely. For a long-term investment, railway is a sector and power. These two are my hot favorite sectors, and I have been advising clients. Any correction on these two sectors, the IRFC, IRCTC, they both are my pick, and we should invest on every dip. But short-term technicals are looking a bit with weakness. So talking about IRCTC, currently 923 is exactly a 200-day average, and we have been taking support at this level since last 18 months. So today's closing would be crucial. If we close below 920, I think there is more weakness. Otherwise, we may consolidate around same level. So as a short-term trader, maybe we'll wait for a day on IRCTC. But as a long-term investor, buy on every day IRCTC and IRFC.
Okay, got that. So that is the view coming in on IRCTC post the earnings on the technical parameters right there. 321. Kush, any BTST, STBT trades that you'd like to highlight for our viewers today?
So already, we have highlighted on M&M and Tata Motors. So one more stock, I believe could, give some correction tomorrow is Reliance, because I think Reliance Industry is the only stock which is holding up Nifty a bit on the future side. But, pressure, we have seen a head and shoulder pattern breakout last week, and that is a, reversal. So I think it's not a STBT. STBT are on M&M and Tata Motors. But if you are a positional trader on futures, you can short Reliance with the stop loss of 2980. Downside targets are 2720, which is head and shoulder pattern target. So maybe two expiries you can just roll over Reliance on the short side.
Okay, just for those who still believe in positivity, Reliance is in the green today. Kush hopes that that will also turn to red maybe in a couple of days. There's no green tick on the Nifty, but nevertheless Reliance is doing its bit, adding 5 points to Nifty's green total. Titan is adding almost 6.5 points, 2 points by Sun Pharma, Dr. Reddy's and Apollo Hospitals each. So the advanced decline ratio on the Nifty, I think today is 11:39. Only 11 Nifty stocks are in the green, 39 in the red. Let's look at the top losers there. It will give you an idea. Of course, it's the pain is led by HDFC Bank, 3.4% lower. BPCL is also 3.4% lower, 322 almost. Shriram Finance pulling it down by 2.6%, 28.99. HDFC Life and Grasim are the two other losers, 2% each. In fact, if you look at the stocks that have posted losses of more than 2% on the Nifty, they are 1, 2, 3, 4, 5, 6, 7, 2, 9. So 9 stocks. On the gaining side, Apollo Hospitals earnings boy 1.3% higher, Titan 2% higher, Dr. Reddy's, Tata Consumer, Nestle. So ladies and gentlemen, from this list it's apparent that money is continuously moving towards defensive counters in the FMCG and the pharma space. The top 7 gainers are either pharma or FMCG. So that's the story for today. Huge sell-off on HDFC Bank because traders feel that the new weightage given by the MSCI Global Index, which will come into effect on 31st of August, is less than expected, and therefore you see this selling pressure built up. Apart from that, there is hardly anything to complain. The IPO market is flourishing. 2 very good listings today in the form of Brainbees and Unicommerce, 100% uptick on Unicommerce and a 35% uptick on the IPO price of First Cry or Brainbees as it is better known as. And of course, decent profit booking in defense, in railway, and a lot of money moving into pharma and FMCG. That's it from my side. Sakshi, yours.
Okay, right. So we have just the time to wrap up the markets now. We'll start doing so. But Kush, anything else that we missed asked to ask you for trade today? Any stock or sector that you'd like to highlight? Maybe for the tomorrow, as to because right before the truncated day holiday, how should one be really looking forward to the trade tomorrow?
No, definitely, PSU banks are, SBI is hammering a lot. SBI is at a new low since, first time after, we may say 4th June. And PSU bank index is also almost, just 2% away from the election day low, that is 4th June. So, PSU bank should be on your focus. I think we may see some more pressure coming from PSU bank.
Okay, well, thank you so much, Kush, for being with us on this special edition and sharing all your thoughts and ideas and various sectors and the stock strategies you've shared with all our viewers. Appreciate your time with us. We'll start winding up the markets now, viewers. 212 points lower in trade. We are going to be seeing a close below 24,200 for the Nifty for now, and almost at the low point of the day for sure. All the sectors, barring consumer durables, they've pulled down in trade, led by PSU banks now, which are down by 1.8%. PSE index, the PSU stocks also down by 1.7%. Financials down by 1.8% too. Metals, Nifty Bank overall, small caps have dragged to 1.3%. You have the mid cap index also, that's down by 0.8%. So it's the small caps that is taking a bigger beating. Oil and gas, Nifty next 50 stocks, private banks, infra, realty, auto, FMCG, pharma, all down in trade. IT is absolutely flat. Consumer durables is holding up by 1.2% higher, led by stocks like Titan, which is the top mover on the Nifty today, and is 2% up at 3385, followed by pharma names like Apollo Hospitals, Dr. Reddy's holding up. From the FMCG space, it is Nestle that's been holding up, and Tata Consumer Products as well. And IT space stocks like HCL Technologies have also tried to stem the losses for the Nifty in trade today as well. Reliance is up 0.2% at 29.26, lending its slight support to the market momentum. BPCL has now slipped lower, almost 3.7% in trade. It's the top loser on the Nifty now, along with HDFC Bank, that's down by 3.3%. It's the major drag on the Nifty today. Shriram Finance, HDFC Life, Tata Steel, Grasim, SBI, these are the stocks that are down by over 2% each in trade today. PSU stocks, of course, we are seeing sharp fall across LIC, BPCL, BHEL, IOC, Steel Authority, PFC, REC, Container Corp. These are the ones that are dragging. Only Oil India remains up 2.5% amidst the major ones. FNO movers, Hind Copper, that continues to shine bright within the FNO space, 5.6% up. Balrampur Chini Mills, 4% higher. Hindustan Copper, Gujarat Narmada Valley Fertilizers, Marico, Granules, Oro Pharma, these are among the top movers on the FNO space. On the downside, clearly Aarti Industries down by 15.7% today. Chambal Fertilizers comes next with about 7.7% fall. Zydus Life, Aditya Birla Fashion Retail, Naveen Fluorine, Deepak Nitrite, Chemicals and Fertilizers definitely taking a beating, and Vodafone Idea that's dropped by about 3.7% within the FNO space as well. Top gainers within the broader markets include names like Unicommerce eSolutions, the listed entities, Day One debut, and strong moves that have been seen on this one. It's still holding up 95.3% higher in trade. Remember, it listed at 118% premium. Brainbees is holding up 45% higher, the parent company of First Cry. Then apart from this, you also have stocks like Dynacon Systems, you have Triveni Turbine that's up 13% in trade. Inox Wind Energy 10% higher. You have Aban Offshore that's up and about. Salzer Electronics, Keynes Technology, Electra Green Tech. These are the stocks within the broader markets that have shot up in trade, and strong moves were being seen despite the overall markets that have been losing some ground. There you have it, 206 points lower, 24,140 is where the screen has frozen. We'll leave you at that, viewers. Thanks from both Shell and me, but do stay tuned as action continues even beyond the stock market hours for you on Business Business Today Television. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Daily Calls, your favorite show, a show which addresses all your stock-specific related queries. Now, in case you're watching this show for the very first time, this is the show where top market experts can answer any and every question related to the stocks in your portfolio or on your watch list as well. Whether you want to take an entry into a fresh stock or you want to find the right exit time for your stocks as well. The WhatsApp number is flashing on your screen. So send us your questions quickly with your names, your location and your contact details so that we can dial you back and include you live on our show. A lot of viewers are already joining in on our YouTube platform and they are using the comment section to send us your questions. So you can do the same. Let me welcome all our viewers who are joining in. Kavya is with us. We have Ankur Modi, Vishwas Sharma, Vinita Gupta, Avdesh Thakur. Warm welcome to all of you. Thank you so much for taking the time out. We also have on our Business Today Bazaar platform Mohit Yadav and Avdesh Thakur joining in. आप सभी का स्वागत है. आज जो थोड़ी डिले हुआ है उसके लिए हम माफ़ी चाहते हैं. आज हमारा शो थोड़ा सा डिले शुरू हुआ है और उसके लिए ख़ास तौर पर हमारे एक मैनेजमेंट जुड़ी हुई थी जो कि एक नए आईपीओ के बारे में है. आज जो नई लिस्टिंग हुई है यूनिकॉमर्स के आईपीओ के मैनेजमेंट हमारे साथ 12 बजे से जुड़े हुए थे, जिसकी वजह से आज हमें शो थोड़ा सा डिले शुरू करना पड़ा. लेकिन आपके सभी सवालों के जवाब देने की हम आज के शो में कोशिश